Hi there, traders. This is Brad Gill with the FX Market Insight for the 18th of October. All right, as we come into Thursday's trading in Asia, let's take a look where the major currencies are. Now, as you can see on most of the pairs here, the major pairs, the US dollar has rallied pretty much across the board. Now, it's up against all major pairs. Now, the main cause of all of this was the sort of, well, there's a couple of things. Usually it's just one key event. But we do have, obviously, Brexit, which is putting downward pressure on sterling still. There's been a bit of negativity coming through on that. We had the slightly weaker UK CPI numbers, which had already dropped about 40 points before the release. So I thought that was probably leaked. Sat around for a while. Then you got the various Brexit issues. And finally, the Fed minutes came through, showing that the Fed are very confident with their current plan. They are on a continuation of raising rates next year. And there's a 78% chance of a rate hike even in December. So you see Euro just sort of drifting lower. It's been waiting for some US dollar direction. Now, dollar CAD, right, it's up, with that strong dollar bias, as well as oil has dropped a couple of bucks. Now, that's obviously weaker for CAD. So you got a double whammy there on dollar CAD. That's why it's higher. Dollar yen is just going with the general slightly firmer US dollar. The Aussie and Kiwi, well, they're just sort of just following the tune. I think their little run to the top side looks like it's come to an end. All right, so let's just come across here. Actually, one thing before I just take you to the let me just take you to the US dollar. But just show you what's going on here. You can see the impact of the moves on the dollar index. It is slightly higher. Okay, it's about 50, 60 points higher. But overall, it's still just trading sideways. So don't get excited about anything there. Dollar one, well, once again, the US has reiterated that it's accusing no one of market or currency manipulation. I don't know what that's all about, right? Because it's pretty obvious. So there's some obviously cloak and dagger there, or something that runs into play. If you're basically caught manipulating the currencies, then you're kicked out of the whole market and all sorts of things. So I don't know what the ramifications there are, but we'll come into that. The equity markets, US equities, pretty flat. Okay, they're sort of scratching their head wondering what the hell's going on as well. So we've got the Fed. They've given the US dollar a little bit of direction, but we got that from the Fed meeting a week or so ago. So when you come back to have a look at what's going on, I've noticed something very clear, and it's because I'm doing the daily analysis each day. So if you come into the MyFX Trading Hub, right, and you're looking at the overall trading conditions, you go through the sort of general routine. Okay, geopolitics, yeah, they are just definitely coming into play, although yesterday's moves in the North America session were more fundamental based, coming from the Fed. I'll come to the upcoming events shortly, but one thing I wanted to highlight was just coming down to the major pairs here, right? And I've got the daily analysis snapshot. This is not the overall summary, obviously. These pairs are all just trading sideways across the board in my eyes. What I'm finding is when I'm doing the daily analysis summary, right, the detail of each of these, all I'm doing is pretty much adjusting the hourly charts from up to down to up to down to sideways, etc., etc. The overall long-term trend of these currencies, right, nothing's changed, and there's been no fundamental shift. So if I just give you a bit of a look here at what I'm talking about, okay, these are the major charts once again, but on a daily perspective. Now, yeah, overall, the Aussie and Kiwi on a daily chart pattern are moving lower, although they have sort of stalled and are trading sideways just at the moment. But still, until these trend lines are broken, you've got to respect them, and those trends are down. Euro, just sideways. Sterling, sideways. Dollar CAD, sideways. And dollar yen, well, it's pretty steady, but once again, you've got to respect that support trend line. It just held in there before. It's in a slight uptrend. So there's nothing big happening, right? You've got to understand that, and don't get frustrated running into looking for cash when the cash isn't on the table on the shorter term perspective. What I'm finding is, and I'm talking to a lot of traders, they are getting whipped about, right, on the day-to-day sort of grind, like this sort of action here. It's dropping down, and I'm sort of getting caught up in this myself. You're seeing sterling, like yesterday, the CPI numbers are weak. It drops just down through the trend line, rallies 20, 25 points. And then, you know what, that's too hard. You think, I'll get out of that. And about 12 hours later, you find it lower. But, there's too many uncertainties with Brexit, I find when I'm trading sterling at the moment, it's very reactionary. The opportunities around the numbers are very few and far between because we don't have, sterling, euro, CAD, they're all trading sideways. So with that, there's no clear upwards or downwards momentum except from what comes from the data, and we've got the Brexit situation. Now, dollar CAD, okay, I think it's very clear we can start looking at oil as being the main driver for dollar CAD at the moment. That's key to what's going on there. Kiwi, well, I'll tell you what, it had a pretty good run to the top side. It is starting to slowly fall. Now, don't forget, the sentiment from the FOMC minutes was already in the market, right? What it is, it's a fresh tune-up of what's going on. So that's where that little bit of dollar strength's come from. And euro, to me, has been like a sitting target. It's actually appreciated on the back of US dollar weakness. And then when those geopolitical issues kick in, you get a bit of US dollar strength, or on the back of fundamentals, it falls. But overall, it's not really going anywhere. Okay. Now, let me just come across and show you where the general news is that is impacting the general market, right? And this is what's frustrating a lot of traders. I'm not talking just retail traders. I'm talking about the guys at the banks. The guys I'm talking to are just pulling their hair out. Dollar gains as Fed minutes show further rate hikes. Yeah, it's up slightly. It takes a bit of pressure off the downside, which is coming from this lunatic here. All the various things that he's doing is he's trying to get the dollar as low as he can, even by criticising the Fed and saying Jerome Powell's job's in jeopardy and all sorts of rubbish. I mean, Jerome Powell is probably being the most sensible Fed chairman I've seen in many, many moons. Go back to Greenspan or even before then. Okay, the pound eases after weaker inflation. Now, inflation came out slightly weaker than the forecast, but it's still well above 2%. Fundamentals in the UK are very, very strong, right? And I mentioned this yesterday. I think sterling, once Brexit's out of the way, sterling will come back to the fundamentals and it should rally. Dollar CAD slides as oil tumbles. Now, dollar CAD, everything's sort of been factored into dollar CAD. Now it's oil taking over control of what's going on there. So just make sure you're aware of that. And that's going to be very important as we go through the next period of trading. Now, so what do we do today? Now, the key thing is, okay, well, you've got to respect the market conditions. We still are getting pulled around a bit by geopolitical events, especially Brexit news. Now, you come over to the upcoming events, and this is very important. Now, employment numbers, we've been always looking for something tangible on the Aussie to get into. The numbers are up, they're down, they're up, they're down. There's no consistency with the numbers. We really need either really strong or really weak numbers to get things moving. Aussie is on the back foot at the moment after the FOMC minutes. Weaker employment numbers here gives us a chance to get into a trade the downside. To me, that's the best trade coming up. Just keep an eye out for the Bank of Japan Governor Kuroda. He is speaking through the day. Now, that could be anything, could be nothing. He could go on a weird tangent. I don't think he will, but it's the governor's talking. Be aware of it. Now, sterling, once again, we're back up for retail sales. Now, I tell you what, this is a hard one. You get grind down by these numbers. I'll have a look at this, but I tell you what, I'm probably going to be looking at it more so than looking at the trading opportunity around that. And then you've got some Philly Fed numbers coming out in the North American session. But there's one key component here that isn't on this list, right? And this is what you need to be aware of. It's day 2 of the EU summit. And what we're talking about is the EU and the UK trying to come together to formulate some sort of deal for Brexit that benefits both of them. Okay, and that's the main thing. Now, I didn't put it in the calendar of events here. Otherwise, if I threw it up here, that would sort of take euro out of the equation as a trading opportunity. But to me, euro's probably got the best trading structure. It's moving on fundamentals, generally the US, also those geopolitical issues, but it will move around with the EU summit, what comes out of the mouths of either the EU or UK punters. We just had, I just come back and give you the sort of bit of a look here. We just had some stuff out of Theresa May, for example, was talking here a short while ago, just saying, look, we've got last stage, we need to encourage everyone to come together. They were talking about even setting up some more talks, but she's saying, we need to come together. It's a tough choice. Sterling dropped about 25 points quickly and then slowly recovered. So anything that comes out about Brexit is the market is very nervous about it. So you need to be aware of that. All right, that's pretty much it, guys. So just keep it steady. Understand the markets. This is really challenging conditions where you need to focus on the opportunities. Now, the major pairs. Okay, just to reiterate before I finish up, long term, like overall, on an hourly, weekly, daily perspective, these things are just trading sideways. So there's no clear sentiment. Now that probably leaves for us, it does leave something on the table. There are potentially short-term trading opportunities around some of the upcoming events, but just be aware you're really looking for your hourly charts to chime in with general short-term momentum, and that's where the opportunity may come from. Outside of that, we're waiting for more news out of the EU summit, and we're waiting for our good friend, the psychotic lunatic, Mr. Donald, to come up with something else that's a little bit crazy. All right, and just to finish up too, this is that US government refrains from calling China a currency manipulator. It's like schoolboy handbags at 10 paces. Like, let's get over it, put some more tariffs on or not, and let's just start trading, because it'll make things a lot easier. All right, guys, that's it from me. Bit of frustration at the moment, just waiting for these currencies to chime in. But this is all about being patient, waiting for the opportunity. Don't let the market grind you down and just start trading recklessly. All right. Good luck, guys. We'll see you in the live trade zone. Cheerio.